10 years ago, it was too easy credit that brought financial markets to their knees. Today, it could be a global debt of $247 trillion that causes the next crash. After a decade of escalating U.S. household debt brought on by low wages and the national debt more than doubling over the same time frame to $21 trillion, debt could soon put the brakes on this economic recovery, analyst warns. Quote, "We think the major economies are on the cusp of this turn into the worst recession we have seen in 10 years, quote, said Gunn, head of global research at Elliott Wave International. And in a note he added, quote, should the U.S. economy start to shrink, and our analysts suggest that it will happen, the high nominal levels of debt will instantly become a very big issue, unquote. So here are a few stats to consider and why this might happen. 1. U.S. household debt of $13.1 trillion now exceeds the 2008 peak. That's due in part to the mortgage lending, which is hovering near its decade-ago level of $9 trillion plus. Number 2. Student loans outstanding has skyrocketed from $611 billion in 2008 to around $1.5 trillion as of today. Number 3. Auto loans at nearly $1.25 trillion have exceeded the 2008 total, while credit card balances are just as high as before the Great Recession. Meanwhile, global debt, a result of central banks flooding economies with cheap money to lift them out of the funk, is now $247 trillion, up from $177 trillion in 2008. That is close to 2.5 times the size of the global economy. Quote, "We won't be able to call it a recession. It's going to be worse than the Great Depression," said economist Peter Schiff, forecasting a major economic downturn as early as the tail end of Trump's presidency's first term. Quote, "The U.S. economy is in so much worse shape than it was a decade ago," unquote. Economic theorist says unsurmountable debt is the big kahuna, the huge sums that certainly fed the boom times. But since it must eventually be repaid, the tipping point will come when a wave of defaults by overwhelming borrowers, potentially squeezed by rising interest rates, leads to a widespread reduction in spending and incomes, economist explains. Although Schiff has gotten some calls wrong in the past, he is convinced he is right on the money this time. Quote, "I think we are going to have a dollar crisis. You think the Turkish lira looks bad now. Wait till you see when the dollar is imploding and we have sovereign debt crisis in the U.S., he said. The U.S. government is going to be given a choice between defaulting on debt or else massive runaway inflation," unquote. Earlier this year, Goldman Sachs said the fiscal outlook for the U.S. was not good and could threaten the nation's economic security during the next recession. Schiff dismisses the latest batch of positive indicators, including the lowest unemployment rate in a generation, soaring business confidence spurred by President Trump's tax cut, and the Dow hitting record highs. He's quoted, "Obviously, there's a whole lot of optimism, but there is a very good chance the U.S. economy is in a recession within the next 2 years. This is already the second longest economic expansion in history," unquote. Adding the recent dips in the new housing starts and auto sales may be red flags. Gunn sees a brutal deflationary spiral ahead in the next downturn. Quote, "People will look to central banks to help them out, but the authorities will be found wanting. Our prediction is that central banks will go from being feted for saving the world in 2008 to being vilified for being impotent in the coming deflationary crash." If you enjoyed this RTD News update, give it a thumbs up as well as share it. Look forward to bringing more news later. Enjoy your day.